Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, May 24th, the year 2018. Let's talk trading. Why you do not get better at trading, part 4. Okay, what have we gone over? Part 1, not trading enough and not trading consistently. This is based on something I saw a video on how to become a better bass player. And he talks about practicing. I'm substituting the word trading. And then the next one we talked about was the shiny object syndrome. Always going after that new indicator, that new system, etc. And yesterday we talked about trading step by step in the correct order. Now, today, this could be the final part, I'm not sure, but we're going to talk about you don't know what to trade and you don't know how to trade. So, in that, we're talking about technique, timing, chart visualization, what type of trading method or study, and basically learning the language of trading. Now, in that technique, there's so many different techniques, indicators. I mean, we've got swing traders, trend traders, supply, demand traders, support, resistance traders, horizontal line traders, squiggly line traders, just all kind of techniques. Now, are you going to be a jack of all techniques or a master of one? Some people say that, you have to pick, depending on the market, meaning market conditions, then you use one method, like if you're in a choppy market versus if you're in a trending market. But you guys who followed me or been with me for years know how I feel about trends. The trend doesn't exist. It exists only in the mind of the trader. And so that's just one thing. So I would suggest you pick one technique or method, one system, and you learn it inside and out. You become a master of it. And to me, it's just that simple. Timing. We all know trading is mostly waiting. To click in or click out of a trade only takes, a second or two at most, and the rest is waiting. You have to have patience. You have to be good at doing nothing but sitting and waiting. I mean, I think one of the famous traders said something, all the money he makes while he waits. Because, you can't make money while you're doing something in trading. You enter the trade, you sit back, you wait, you see what happens next. I mean, that's just the way it works, right? Chart visualization. Now, in other words, you look at a chart and it's like, what do you see? Do you see things that aren't there, or do you see exactly what's there? I did this, I did a little test, I think it was in the mid 2000s, where I just put up a blank candle chart and I said, tell me what you see. And people started chiming in. And I think everybody got it wrong, because they were telling me they see support, they see resistance, they see a trend, they see blah, blah, blah. And I go, that's not what you see. That's your interpretation of what you see. What you see are red and green colored boxes with lines sticking out, or red and green rectangles. That's what you see. And there's like, oh, yeah, now I get it. So you have to be able to distinguish between what you see and what you are interpreting. It's a big, huge difference. So, for example, and that's one of the things that led me to just trading horizontal lines, because either price crosses a line or it doesn't. It doesn't matter the time frame. You put that line on the chart, you switch time frames, the line stays at that same level. And it's basically just that simple. Now, once again, we talked about different studies, meaning, trending, if you believe in that, choppy market type things, reversals. Because to me, as I've defined price action, it's really simple. Either price breaks out of the previous candles or bars high or low, or it doesn't. It reverses off of a higher low or near a higher low. So it either stays within the previous candle's range or it exits the range, to put it most simply. And you can look at any chart, doesn't matter time frame. If you put the previous high and low on there, that current candle is either going to stay within that high and low or it's going to exit it. And we'll see that. We see that every day in the charts that I provide. And finally, talk about learning the language. I mean, you can't really learn something until you learn the language. So you need to get in there. If you don't know all the different terms, you just basically need to learn the lingo. And and we talked about yesterday doing things in the correct order. I would think learning the lingo is probably the most important thing to start with, because otherwise, how are you going to understand anything that you read or hear? So definitely you have to learn the language of trading. I think maybe there will be one more part after this, and that I think that'll wrap it up. And I guess I'll do it tomorrow as part of the weekly wrap up. So, as always, money and risk management. There you go. Okay, what has happened here? Well, it looks like the dollar yen, broke out at a week high and broke out at a week low. Big red candle. And we still have 1, 2, 3 open gaps, but you can see the rest have filled. And we just talked about breaking out of the previous day's high or low. There you see we've had a breakout of yesterday's low. Pretty significant breakout. And you can see here, buy zone once again. It's always going to be 8 to 10 pips off the daily open there, Asian market open, actually New Zealand, Australian, New Zealand open. And you can see here we had 2 triggers. That was it. It did it. Notice we have a missed pivot. Didn't hit that pivot. And you can see right now we've got a rat zone trade here. We're getting into a rat reversal situation. This is live, no hairy hindsight. Once again, those of you who like trading the pivot, didn't happen. You can see here we crossed below the monthly open. So now we're got a red month happening. And there's that pivot line, didn't hit it. So we've got an open pivot. Now remember, you see we had a missed pivot here. It got taken out. We had no, that pivot was hit. I think we had another missed pivot right there. And you see that got taken out. So sometimes you have to wait, but those pivots, they get taken out a lot. Price action, price action, price action. Reddit, you see that dot, green at the line, but since this dot says we're going this way, you basically want to trade off the dots. And you can see here it hit 20, but then it reversed, so there really wasn't much profit there. Almost have to scratch that trade. Once again, this is live. all these, whenever I make these videos, it's live. I don't really make them after the fact. Some people say, well, you talk about stuff that happened hours ago. It's just like, well, yeah, but you got to remember these lines don't move with the exception of the holo. Everything else is pretty much fixed because these are all the previous day's lines, as I mentioned about price action. And you can see right here the price action. Once again, red at the line, green at the line. It's just something that's very simple. We talked about wick zones. Once again, price doesn't like staying in the wick zones. You can see it's out. We've got a midpoint right here, if I remember correctly. No, that's not, that looks like that was the monthly open. Yeah, monthly open. Forgot. Usually this is the color I use for midpoint, but in this particular setup, that was the monthly open. And there's the previous mid right there, 110.23. And you can see we've got a holo trade in the making right here. So it looks like you might get another opportunity to go holo here. And you can see the price action on the tick chart. Let's see. Oh, I added a chart here of something that we looked at before, the missed pivots. You can see looking at the weekly, or we can switch over to the daily. You can see here there's a couple of missed pivots, and that missed pivot was taken out. So you can see here we've got a couple of recent misses. We've got 4 from last month, March. We've got 1 from, last month, April. We got 1 back here in March. And here they all are. And you can see here we've got missed pivots. This is all the missed pivots right here. These are basically, I should call these missed pivots that are still open. These were the actual missed pivots. That's why this list is shorter than this list. And if you're curious, these are the missed pivot indicators. Bars ago. Missed pivot tells you how many bars ago it happened. So you can see here 0 means the current pivot is still open. I thought you might like to see those. Here we've got the IRB lines. As you can see, there was profit there. Right there was a trigger on a short, and there was another trigger on a short right there. And see, that's one of those whopper trades that we all, hope to get. And we already did that one. Just more price action here at the tick level, looking at the peaks and valleys to pinpoint the entries. So as we go back through the charts, 3 pips off the low on the yen. And so why you do not get better at trading. So technique, timing, chart visualization, what studies are you basing your technique on, or what technique? You got to learn the language, and you need to know what to trade and how to trade, because you select markets, you select instruments in those markets, and that's pretty much it. It's pretty much that simple. And what's really simple is remembering It's not what you trade, it's how you trade it. The Rumpled One, signing off to drain the banks.